Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, August 16th, 5:20 p.m. Eastern Time, coming to you from stormy St. Augustine Beach, Florida, once again, matching the output of the market today. State of the market, we've downgraded it to a mild correction. Why did we do that? Because we observe 10 or classify the market into 10 different conditions, and we just downgraded from a bull pullback, which is a mild pullback in the S&P of 3 to 4%, to a mild correction, as we are now 4.4% off of the high in the S&P 500. So that's our classification. Our expectation for performance after we've cut uh, our beta recently, reduced our longs, added a hedge today. We should be basically in line with this. Some days above, some days below, because it means that the ceiling for our beta will be 1.0 until we get back above. That's our target ceiling anyway, until we get back above the 50-day moving average in the S&P 500. So check over here at the trend gauge. Leaders were downgraded last week, and held up yesterday okay relative to the indexes, but not today. Not a good day for leaders at all. Today we moved the short term down, downgraded it to bearish, and we also downgraded medium term to neutral, still with the Dow hanging on above the medium-term 50-day moving average, but all five of the indexes below the 21, four of the five below the 50. Long-term, we're all still above the 200-day moving average. All five of the major indexes are anyway. But what happened today? We opened down slightly, traded in an extremely tight range, less than a half of a percent for the first couple of hours, and then we started drifting lower. The FOMC minutes came out at 2 o'clock, and they were not dovish. They were hawkish. They were loaded with references to significant inflation risks, may need to do additional rate cuts, and the markets chopped around a little bit, spiked higher to suck in some buyers, and then reversed hard and closed at the low of the day. Not a good day again for the markets. Everybody's asking for that oversold bounce, but where is it? Can't get it if the bulls stay in hiding. It'll come. Reversion of the mean is something that is always constant in the market, but predicting when it's going to come was like trying to predict when the NASDAQ 100 stocks were going to stop being so ridiculously extended from their 50-day moving average. You knew it was going to happen. You didn't know exactly when. Well, now those NASDAQ 100 Big Seven stocks have gone from accounting for most of the gains in the index for most of the year to accounting for all of the losses this month. So, as I said, bulls in hiding, and ugly numbers on the day. Here they are. Our 8 ETF growth composite screaming bearish, down 1.2%. S&P 500 down 1.2%. NASDAQ 100 down 1.1%. Dow down a percent. Mid caps down 1.3. Is that right on the Dow? I don't think that's right on the Dow. Dow is down 0.52%. Sorry, I had to pause and correct these. I updated the headline but didn't update all of the numbers. But here are the numbers now. The RGA down 1.3%, S&P down 0.76%, NASDAQ 100 down 1.06%, Dow down 0.5%, mid caps down 0.9, Russell 2, excuse me, Russell 2000 small caps down 1.3%. Global diversified 60/40 down 0.54%. Bonds down again, but not as bad as the total stock market. And in-house GROTECTION down 0.68%. Couple some more exposure taken off today in the portfolio. We will discuss that when we get to the tail of the tape. Let's get into the charts now. S&P 500, here you can see very clearly oversold 2 days ago. A false hookup gave the bulls a little bit of hope. This was on Monday. Last 2 days, not so much. Clearly breaking below the 50-day moving average, now a percent below the 50-day. The market, the correction, the market, I should say, this pullback feels a lot worse than it is because growth stocks are really getting hammered. And why are they getting hammered? We've discussed the impact of rising interest rates on growth stocks multiple times, and that's really what we're seeing here. So S&P 500 clear break of the 50-day, failed breakout now, the 712 breakout, very clearly broken that breakout level of 44.58. Just a memory for right now. Doesn't mean we can't bounce, but the question then will be, will you buy the bounce, or is the bounce something to be sold? This is one of the most difficult aspects of active investing. We're conditioned to buy strength as CanSlim followers, but you've got to understand what type of a market that you're in. And that's why O'Neill goes for a fourth day or after follow through day off the bottom. So the first thing to do is to set the bottom. You could rally on the first day, but that's not the time to jump all in. In fact, that may present an opportunity to get out of some things that possibly you should have sold before. And then we start counting the days. And once we reach day 4, we look for a follow through day, which is a strong up move in the indexes and leading stocks. But not a lot of leading stocks are set up in sound bases right now. A lot of the former leaders are pulling back to the 50-day, and more broke the 50-day today. That's not a good setup. So basically, we're forming the left sides of bases, and we need to bottom, start putting in the right sides of bases. Some of the stronger stocks will break out before the indexes do, and those are the ones that we'll be looking for should we get a follow through day. But for now, it's time to sit on your hands. Move on to the NASDAQ 100. This is worse than the S&P. You can see 3 of the last 4 days closing below the 50-day moving average. Very oversold. Still looking for the oversold bounce. Nowhere in sight with the bulls in hiding. Dow Jones Industrial Average, 2 closes below the 21 now, but still above the 50-day moving average and still above this breakout level of 34,600. But coming back right to it. In fact, that's right at the 50-day moving average. So will the Dow bounce there? That's one of the questions that everybody wants to know. The Dow outperforms, or I should say loses less in downtrends because it's a more defensive index. Here, mid caps with a clear break of the 50-day moving average. Also, small caps even worse. Now that oils are jumping into the bearishness, they started the day up today, ended the day red, and we've broken the 21 clearly. 2 closes below the 50, approaching the 200-day. Failed breakout now above that 189 pivot. Not too much bullish to look for here. Any enthusiasm that bulls might have seen on Monday undone with Tuesday and Wednesday's action. Let's look at the VIX. The VIX was lower most of the day, oddly, while the market was pulling back, but by the end of the day, spiked higher, making a higher high. Here you see it pulling back in the day, at the beginning of the day, then big shakeout after the Fed minutes came out, spike high uh, during the last hour, and then a little bit of moderation, but closing at the high of the day, above the 50-day, above the 21-day, above the 15 level. That is a headwind for stocks. Let's flip to the dollar. Dollar got worse, meaning stronger as the day went along. You can see it closed near the high of the day, and it continues this strong trend up off this 27.55 level, breaking out above this 28.70-ish level. Uh, Strong dollar, not good for stocks. What did this do to precious metals? We'll look at gold first. Remember the inverse relationship where precious metals move opposite of what the dollar normally, and that's what happened today too. Here you see gold down 0.6%, gold stocks down 1.3%, continue to fall apart. You just got to obey your stops in these things. We were long these around here. This looked like a really good setup, but when it fails, it fails. Don't argue with the market. Silver, SLV down 0.5%, and Bitcoin have been trading in a tight range. Still in a tight range, just barely down on the day. Let's flip to bonds now. BND, broad bond index, lower low. That means broadly prices are making a higher high. TLT, the 30-year, that's a lower low also. How about the yield on the 30-year? Yep, that's a higher high, not a higher closing high, or a higher closing high, not a higher high relative to yesterday. TNX, the 10-year, up 0.88%, and it was an inverse relationship with stocks and bonds today. You can see uh, yields trickling higher all day long. The higher they got, the worse stocks got. That's all the inter-asset correlation we do. Let's flip now to the tail of the tape. Let me bring this back in here. You can pause it. Basically, the stochastic, everything is oversold. The dollar's high, yields are near highs. Uh, Tomorrow we'll get an update on sentiment from AAII. There's a saying that there's nothing like price to change sentiment. I would certainly expect these numbers to go lower after the action we've seen the first couple weeks in August. Let's see. So the news, like I said, FOMC minutes, significant upside risk to inflation, not good. And Atlanta Fed GDP has been upgraded to 5.8% for Q3. Well, that's raising inflation risk certainly. And eh, the uh, the Fed fund futures are pricing in a 35% chance of a hike, not at this next meeting, but at the meeting after. We've got Jackson Hole, I think, next week, where Powell speaks. This has moved the markets before. We'll be on the lookout for what he says there. Day count, 11-day downtrend now. Minus 11. That means 11 days below the 80 EMA, 7 days below the 21 EMA. Our expectations short-term negative, as they have been since the S&P and the Nasdaq broke below the 21 EMA. Sectors, the only one of the spider sectors up today was utilities, 10 out of 11 down, led by tech and real estate. What do we do in-house today? We sold Bros, just got stopped out on it, plain and simple. We trimmed Amazon. That broke below the 137 level, still holding the 21 EMA. And we hedged with SDS. Best, I'll show on a chart. Let's look at a 5-minute chart of the S&P 500. What was the 50-day moving average coming into today? It was 44.50. Where did we top 3 times this morning trying to rally? 44.50. But technical analysis is voodoo. That doesn't mean anything. And then after that failure with the base, there was the breakdown. Here's the bounce. After this bounce failed, we put the hedge on 5% SDS. So that's hedging. That's basically a minus 10 on the adjusted beta. So our ceiling, as I said yesterday, is a 1. Target beta of a 1 when we're under the 50-day moving average. We're at a 0.77 after today's sells, trims, and hedges. But the bottom line for the day, the bulls are in hiding, especially after the FOMC minutes. Another late sell-off on the day. That's not bullish in any way, shape, or form. Where's the oversold balance? Everybody's looking for it. We'll get it at some point. Then the million-dollar question: will you buy it, or will you use it to get out of some things that maybe you should have gotten out of earlier? And the key right now, the key level to me for answering that question is that 44.50 level. the 50-day moving average, which is still ascending on a daily chart, but definitely slowing down the slope of its advance. Okay, let's look at a few charts and some commentary. We'll start with Bros, which we sold today. You can see that 200-day moving average failed breakout yesterday. Nice volume on the breakout, reversal with the market, and breaking support with the market today. Let's see what else. VRT is still hanging in there. We still have a 1% position on that. NVIDIA, we're underwater on our ad from that, but it's still holding the 50-day moving average and relatively speaking, not doing bad. Let's see, Amazon, you'll see that we broke below this 137 level. Let's take a look at a 30-minute chart. You can see here pretty clear how we held this 137 level while we were pulling back. We bought here on the move up. Big negative reversal yesterday, lower low today, piercing the 137. It's 135, basically 134 to 135 is a big level right here now, and that coincides with the 21-day moving average, upon which we sit. Let's say it that way. A couple of other stocks that had been leaders and did not have leadership quality qualities today. EXTR, this is one of the strongest networking stocks. Harsh negative reversal, 70% above average volume, down 8.8% on the day. Just brutal. Out of nowhere, I didn't see any news on it. But this is what happens. They come for the leaders, and this is why you don't. You got to have your stops in place, and you got to weigh the winds of the market. Are they in your face or are they at your back? Vicor certainly thought they were at your back when this was up. Uh, I still can't believe that. 58% on its earnings report, made higher highs day 2 and day 3, consolidated nicely day 4, gap down but still inside day 5, and then just started giving way. But it's going to hold the 21-day moving average. No big deal. It should bounce off there. No, breaking the 21-day moving average today, down 5%. Kava reported earnings was looking like it was going to gap up 10%. Everybody was frothy pre-market. Let's see how this acted intraday. Immediate selling, a little bit of strength late in the day. All in all, it was a good earnings report. I've seen, from what I've read, it was a good earnings report, but it's the reaction that matters, and the market is not buying growth right now, certainly not with interest rates going higher. Here's Target. They lowered their guidance, so that resulted in an 8% gap up. Good stuff, right? No, sold off all day from that gap. So institutions are taking this opportunity to exit positions on any strength. That's a very clear change from what was going on in July. Don't play last month's game. MedPace, another strong stock. Big shakeout on earnings, continuing higher, riding the ADMA, breaks the ADMA and breaks the 21 EMA today, down 3.7%. You get smacked enough on these, you get rules and you obey them. On the other hand, coal stocks acting extremely well. Michael did a deep financial dive and was raving about this stock on our afternoon call today. And coal stocks have been strong. Great earnings reaction. Hey, it's a coal stock. It's not a growth stock. It's got a PE of 4. Yeah, their earnings are, look at this, look at the earnings on this coal stocks. 13 up from 13 to $13 in 2022 from $1 in 2021, $22 this year, still $18 this year. Yeah, that's a slowdown in earnings, but the PE is 4. Let's look at another one, AMR. Geez, that's just riding the ADMA higher. What's the PE on that? 3, despite the fact that earnings are slowing down. But these are cheap. They're an energy source. Solar doesn't solve all the problems. Sorry for that. But the market, let's just get back to the S&P. One last look. Close below. The 50-day moving average, let's go to that 60-minute chart where we can clearly see that line in the sand that we were talking about at that 44.58 level, which held, undercut, held, finally giving way yesterday, and a lower close today. 4,400 is the next level down, and we're only 4 points away from that. Is what it is. It's a mild correction on the indexes. Like I said, 4.4% off the highs. Leaders getting taken apart. That's why we observe the RG8, and also why we comment on them separately from the indexes, because this is the pond we fish in. This is how we the edge that we have in the market is to kind of stay in sync with the indexes unless they get in serious trouble. They don't get in serious trouble unless you break the 200-day moving average. So we ride them hard, the indexes I'm talking about, when the S&P is above the 21-day moving average, a little less hard when it's above the 50-day moving average. Certainly not as hard when it breaks the 50-day moving average, but we're going to stay engaged if we're still above the 200-day moving average, because the market chops, and it's a range. You're not getting killed, uh, but staying engaged with a reduced beta on the index is good, leaders bad, and that's where we stand right now. And with that, I'm going to wrap things up for Wednesday, 8/16. Remember, it's not how much you make in the markets, it's how much of that you can keep. Hadn't had to say that in a while, but that's the market we're back to. So we'll follow our rules. Love if you'd reach out to us. Also would love it if you like the video on YouTube. We're getting all-time high views, not necessarily getting all-time high likes. If you don't like it, leave me a comment why. But otherwise, we'd love to click the like button. It helps our algorithms and gets our exposure out there. Any questions, email don@revereasset.com, or my partner Dan Stewart, dan@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. And with that, we close the video for Wednesday, August 16th. This is Don Vandenbord with Revere Asset, telling it like it is. And like it is right now ain't good. Sorry, we don't tell you what you want to hear. We tell you what we have, what you need to hear. Thanks for listening, and have a great day.